Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. Busy day today. On top of the continued developments with the spread of the coronavirus, we also have a Fed meeting today. We also have earnings from Apple and AMD and Mastercard and AT&T and GE. Just a lot of earnings to discuss on our radar here. So on top of that, a couple CEO shakeups this morning, moving markets. Beyond Meat is leaving Tim Hortons. That's some big news for them. And our guest today will break down that Apple report. Mike Olson, managing director at Piper Sandler. He will join us at 8:35 to give us his thoughts on the good and the good from the Apple report, because it was mostly all good. So that'll be at 8:35. You can always give us a call. If you want, leave us a voicemail, 734-494-0246. Ask us a question. We will ask your question answer your question, I guess, on our show. Joel, what's the word here overnight?
Hell of a lineup you got there, Spencer.
A lot going on
today.
today.
Way to go, man. What hell of a producer here. I'm upgrading Spencer to a strong buy here. S&P futures trading up 12 sticks thanks to Apple and few other components in the green. Pre-market high 91.75. Can we get back over 3,300? That's just a mental target. Daily levels are much higher than that. All-time high at 33.37.50. Crude into green by 23 cents at 53.71. Let's call gold flat at 15.70. Silver back under 17.50 at 17.46.5. Bitcoin rally continues, moving towards 10,000, up $235 at 9,410. So Bitcoin on the move.
Defensive.
Defensive play.
Yeah, I mean, I guess if you're worried about a lot of things like a coronavirus, maybe you keep your money in Bitcoin. At least that's what investors are saying as they push that up. I don't have any of my money in Bitcoin, but I think that's, I think the coronavirus is probably the catalyst here to drive this up.
All right, so a lot of things to cover here. So I'm going to let Spencer.
We're going to get into the earnings very quickly here because this is huge earnings day. But I want to take 5 minutes again to talk about the coronavirus because you saw a significant rally yesterday, which I had hoped would happen. And I took that opportunity to lighten up some of my portfolio yesterday. I'm also taking this opportunity today to buy puts on some of my portfolio as well. I'm nervous about it, but I was pricing it out. And for 1 to 2%, you can get 3 to 4 weeks protection. In 2 to 3 weeks, we're going to know a hell of a lot more about this virus, whether it's going to be contained or not. Because if it's not contained in 3 weeks, it's probably not going to get contained. And it's going to be a mess. If they contain it, you're going to lose that 1 to 2% protection. But depending on your vehicle, I was just pricing it out. Protection is not that expensive here right now if you're only going out a few weeks. So probably cheaper after the Apple reports last night too, because we obviously had a lot of earnings reports last night as well. So I just, do you have that chart from that was been tweeting around there last night? I saw that Chris Irons had tweeted out, but from Bianca Research. Do you have that, Spencer? Can you show that?
I do have it up here. I guess I can pull it up.
It's just a simple progression analysis, and all we're doing is looking at
it's one guy's model, so I wouldn't put that much weight into one guy's model.
It's Jim Bianco, though, right?
This is a basic progression, but he's not blowing numbers away here. This is a basic progression analysis. So this is assuming that the virus does not get contained. In all likelihood, folks, it's going to get contained. So these numbers hopefully will not happen. If they do not contain this virus, these numbers are probably very close to being where we're going to go. It's been pretty accurate so far because I saw progression analysis a week ago and they've almost been spot on. It's just assuming the infection rate of 2 to 2.5 and assuming a 53% geometric progression per day. Take it up and by, let's just look at the dates and bring up the calendar and you can look at these numbers. I'm not saying this is going to happen. I don't want any of you guys going saying, rah, Dennis is calling for the end of the world. I'm just saying if they don't get the virus contained soon, we could be potentially looking at something like this, which is scary. So they need to get it contained soon. By Monday, by Saturday, we would be looking around 37,000 infections. But what's scary is if you go all the way to Monday, we're looking at 88,000 people. So from 6 to 88,000 in 5 days. By the following week, 1 week later, you're looking at 1.7 million. And then it just gets silly. I mean, it gets all the way up to on the 21st, 183 million people would be infected. This assumes that the virus does not get contained. Any type of containment will bring these numbers down. So in hope, and we're obviously hoping that they're doing their job and they're going to get this virus contained. But what I'm saying is, if they don't get it contained as well as they should, or if they don't get it contained at all, this is a scary situation. So that's why for the first time in a long time, I'm actually buying protection on my portfolio. That's all. My long-term investments, I'm buying some short-term protection. If I'm wrong, I'm going to lose 1 to 2%. If I'm right, I'm going to protect, the majority of my wealth. So that's it. That's all I want to say about it. And I'm not going rah-rah that this is happening. I'm not betting. I'm not shorting stocks. I'm just simply worried that they don't have it in control. And also, this is assuming that the numbers that China is telling us are correct. We don't know if they're lowballing it. There's been speculation that they are lowballing it. So it's scary, but we can still get this contained. Hopefully we will. We got SARS contained right around the 7,000 number. Hopefully we can get this disease contained, but I'm not 100% sure of that. And I'm actually, you can tell from the last 3 shows, I'm quite worried that they're not going to get it contained. And that's why I'm buying some protection on my portfolio. That's all.
Just from a tactical standpoint here, because we all know how tough options are, right? In timing, right? You got to have your timing right. And so you're using a time frame here. What do you think about some of these bearish ETFs?
Like buying those right now?
Yeah.
The problem is if you're wrong, you lose a lot more than 1 to 2%. So, if this does get contained, the market could really rip. I mean, those Apple earnings were real good, and we're going to get to that. There's some good stuff going on with this market right now. We do have a Fed day. There's a lot of other balls to juggle. Okay. But I think it's all about the virus. I think if the virus gets contained like we hope it should, and I really hope it does, I think we're at new all-time highs in a week and a half. I think if they don't contain it, I think if they don't contain it within 10 days, like get it solidly contained in this regression or this progression analysis is, obviously not being followed. But if we have, just imagine the scenario where we have in looking here at February 10th, which is 12 days from now, 13 days from now, we're 1.7 million people infected. There's going to be some worries. The market's going to be substantially lower if those numbers come to fruition. By February 21st, 183 million people infected. There's going to be nobody even worrying about the markets. The people are going to be worrying about their lives. So that's why this is, that's why I'm buying protection, just in case they don't get this thing contained.
And just
that's
for
all.
a really broad point, we can move on after this. This is just what we do on the show every day, folks. This is scenario analysis. We take the factors that the markets are giving us, we look at it, and we give our opinion. And that's why you guys tune in. This is scenario analysis. This is not saying this is going to happen, then it's not going to happen. It's just from his experience in the markets, his trading, his portfolio.
It's not impossible that this happens.
It's scenario analysis, and it's going into, he knows how much he can lose, right? Whatever you buy, the put premium, there's a risk reward ratio. You want nothing more than the market to rip higher and you lose money on these puts. It's not, we're not looking at it.
I want that to happen.
Exactly.
I want to lose that 1 to 2% because I don't want to be in a scenario where we're worrying, and people aren't going outside. I mean, it's scary over there in China right now. And I hope this doesn't come to here. And it's been good news that we really haven't had an increase in infections over here. I'm not 100% confident that's not the case. And I just think with the market, the way it's reacting right now, it's not concerned about it at all. I mean, you're 1% from all-time highs. You're never going to get a chance to sell at a better price. If you're really worried about a serious contagion happening, holy cow, man, you don't even have to, you're not selling even in the hole. I mean, we're up here again this morning. It's such, if you're really worried about it, it's a huge gift right now. And I'm taking that gift because I am worried about it. That's all. So I'm not buying on the dip, and I sold some stocks in the rip, but mostly I'm just going to hedge myself a little bit. That's all. If I lose, I'm going to lose 1 to 2%. and the world's going to go on. Everybody's going to be fine. Either way, the world's going to go on. Even if this went around the whole world, not everybody is dying from it, and they will figure it out. So it's not like this is an end of the world scenario, but just imagine, if you had millions of deaths, what that does to your GDP, what that does to, your numbers. I mean, it's reasonably
China. I mean,
it's reasonable to think that the market will take a hit. So I don't think we're coming, I don't think it's the end of days, Walking Dead type stuff. It's nothing like that. But we're giving you analysis here that I think the markets could get slammed on this if the numbers continue to climb. And I think that's next week. I don't think it's going to happen today, tomorrow, if the markets get slammed, because even you look at this progression analysis, people aren't going to get scared 10,000. Well, it's not that scary. So they're going to 100,000, 200,000. You can just look at this timeline. And it can kind of give you a feeling, when the market's probably going to get scared is the middle of next week when it starts getting over 100,000. So whether that happens, we hope it doesn't. We hope it gets contained, and we hope these numbers aren't going to go that high. Okay. That's all.
And then the one thing I guess we should have mentioned yesterday is that the Chinese markets weren't even open. They're open now, which gives us more clarity into how they're reacting. But we didn't really have that primary measuring stick to go off of when they were closed for the new year. So the fact that they're open now is at least a little bit helpful.
And I want to get to that in a second, because it's a good point you're making there too. Just one more point. I keep seeing this in my timeline. Whenever I say anything about this virus, they say flu kills 700,000 people a year. 100 million people get infected by the flu. You got to do the math. We did the math on the show. The flu kills 0.14% of people. This is killing 2 to 3%. So in other words, it's 20 times more deadly than the flu. So you cannot compare apples to apples. This is not a normal flu virus. Maybe they come with a vaccine and we don't have to worry about any of that. But even the vaccine, they're starting to get on top of it. They said they're going to test in animals, and it could be ready for humans in 2 to 3 months. Well, in 2 to 3 months, a vaccine is going to be, not very helpful if they don't get this thing contained. They need to get this thing contained, and they need to get it contained now, and I hope they do.
All right.
That's all. So
if they don't, I will see you at your cottage in Canada.
No, he's got only room for me.
Damn. All right.
People are arguing with me, and it's not true. Go do the math. It's 0.14% in the U.S. last year. We already did the math.
Okay.
So I'm not going to keep arguing. This is more deadly than the flu. I'm not going to argue with those people anymore.
All right.
That's a fact.
Moving on to
China.
Apple.
You were saying about China reopening for the first time last night.
Yeah. Down what I think last I saw was 2.5%.
And here's your consideration. So you come in and you look at your ETFs. Well, why are they up? Because we were anticipating that it was going to be down more. We were trading on China ETFs with not all the Chinese markets open. I mean, we have BABA open. We have some of the stocks, but we don't have all the stocks. So we didn't open down as much as, the U.S. investors or investors who were trading the FXI, and obviously the other China ETFs that were still actively trading over here didn't open down as much. And that's good news too. So lots of good news. But now we're going to go 45 minutes of good news, guys. I gave you the scenario analysis. I'm hedging myself because I'm worried about it. We're going into good news now. Apple earnings were great. China didn't open down as much as expected. Lots of good news, which is the reason I'm not selling out my portfolio, but I'm hedging myself. There you go.
Yeah, there's almost nothing bad in the Apple report. The EPS, Tim Cook called it a blockbuster quarter, which it was by every measure. Earnings per share, $4.99 versus $4.55 estimate. Nice beat there. Revenue 91.8 versus $88.5 billion. So a nice beat there as well. iPhone revenue higher. Services revenue was a little bit light, but everything else was higher. Other products revenue that includes the wearables higher. Q2 revenue guidance. They gave a pretty wide range. That's because of the coronavirus, and they just don't know how it'll impact the business this quarter. So they gave a range of $63 to $67 billion of revenue for the current quarter, which was still higher than the estimate. So it's still good news there. Margin guidance was good. I mean, it was all good.
Very good numbers for Apple. I do think there's going to be an impact in the next quarter numbers. Like you just see everything like not operating as much as it was in China, and you think, how does it not impact some of these companies? New all-time highs. I still own Apple in my long-term portfolio. Don't worry, I did not sell my Apple out. 323.65, trading up 6 points here this morning. It's a little bit off the after-hours highs, but I don't like short stocks making new all-time highs.
Nope. But me and my candlestick patterns here, that was a wick there, right on the headline number. So we got up to 327.90. That's $4 away, but man, it's just been a real quiet consolidation here. considering, the price of the stock. And we've been in a trading range here. So I'll just give you this early trading range. We've been holding, let's call it 322.5 to 324. 22.5, 24. That's your trading range. And we've been in that for over an hour. So above 324, I would look for that, progress towards that pre-market high. Coming back on the downside, if you're you still want to buy this off the open, 22.5 looks like the area of support. A lot of volume trading here, but bulls and bears are just coming together here. This is consolidation. You like to see this at 324. So there's my calls in Apple.
And we'll save some of the analysis for our guest at Mike Olson at 8:35. Sure. So we'll come back to Apple later in the show.
Perfect. Let's go Boeing.
Yeah. Okay. Let's go Boeing here. This was an interesting report. I don't know where expectations were, whether they were
in the gutter.
Yeah, expectations were low, and there's no way the numbers can compare to the estimate. So all we have to go off of really is just two or three figures here. Boeing's Q4 EPS. Well, they lost $2.33 per share, which again, there's no way to compare that with any sort of estimate. Sales,
and we know why they lost, because the MAX not in the air.
Sales, they had $17.9 billion in sales last quarter. That was lower than the $21.5 billion estimate. They said costs related to the 737 MAX will grow to around $18.6 billion, which is roughly twice as much as what they had said originally it would cost to get this thing back in the air.
We knew, and this shows you how absolutely insane some of the news algos are. They slammed it on this, and when they were slamming it, I actually was sidetracked and I was like, I need to buy that Boeing. I said it to myself, I'm like, down 6 or 7. I'm like, there's no way. I don't care how bad the numbers. We knew the numbers were going to be bad. So news algo is absolutely destroyed on this, whoever's running it, because you knew the numbers were going to be a disaster. You knew the market was trading higher, and there's not a lot of fear out there right now, overall sentiment. And so I think everything was baked in. So I didn't care how bad the numbers were going to be. Everybody knew the numbers were going to be bad. So I am zero surprised that this turned around and ripped up afterwards. Again, I was doing other things. I was trading a whole bunch of other stocks. I didn't get back to it in time. It was literally down there. It shows it went down there twice. I don't think that's right though. It was down there for like less than a minute, and then they ripped it higher. So initial news algo that hits it on the numbers. Oh, it's a huge miss. You got to sell Boeing. Didn't consider the fact that we knew it was going to be a huge miss. They don't have their major revenue source coming into those numbers. So once the plane gets back in the air, everything changes here again. So I'm not surprised Boeing's rallying on this.
Pull up the daily, Spencer, on here, because it's not, once again, you have a $300 stock, so like the ranges are a little bit different. But to me, when I look just above 330 here, and I'm going back to the middle of January, you're not 1, 2, 3, 4, 5 highs in a row. Let's just call the median of those highs 34.30. That's my target in this one. I think that's the major level of resistance here. Even if you want to go up to 335, I think if you're looking like, okay, they're past the report, they're past the max, the low is in for the move, then you're going to press above this 334.50 area. You're going to close over there, and you're going to make a move at 340. If, in fact, the longer I think it takes to get up to that area, I think the more you're going to roll over a little bit. There's a lot of people that stayed out of the Boeing mess, right? They say, I'm not going to buy Boeing until it breaches 320. And they bought it all the way down here. They're sitting on short-term profits. So, man, that just looks like major resistance to me. Really nothing even in the book here or in the on the daily charts. That first area, if you want to get real close, there is a double top at 333. So there's some targets. On BA, I have no idea where to buy this on the downside on a pullback. Absolutely no idea. Unchanged maybe, and I don't think we're going to see that today.
Let's go to the chips here. A couple of semiconductors
Yep.
reporting yesterday. AMD and Xilinx. We'll start with AMD. Their report first. The earnings were fine. Guidance was a smidge light. So the Q4 EPS, 32 cents per share, beat by a penny. Sales also beat 2.13 versus $2.11 billion. What they are keying in on, though, is the guidance. AMD gave some Q1 sales guidance that was a little bit light. $1.8 billion was their guidance for the current quarter sales, and 1.86 billion was the estimate there. So smidge light on that number. As far as Xilinx, it was an EPS beat, a sales miss, and also much lighter Q4 guidance than AMD.
Stock is just loved. I mean, if you think the world isn't ending, this is probably a buy the dip opportunity in AMD. I'm definitely not selling AMD down here. It's had a hell of a run. It could go down to 45 and would still be in an uptrend. So it's hard to just say this is going to be the low. I would say the first low is that 47.90 low from 2 days ago that it needs to hold. But I am not selling AMD down 4.5% because the stock is loved. I would not be surprised if the coronavirus doesn't play out, and obviously gets contained. I think the stock makes new all-time highs in a month.
Pre-market low right there, Dennis. 47.66. Just sneaky buyer in here between 47.60 and 48. So someone is supporting the stock there. If they could take it down through that 47.60, things do open up on the downside here, and you have to go back a ways here. Oh my gosh, we haven't been under 48 bucks. I'm looking at the daily here. Holy mackerel. Boom. Oh man.
In 2 days?
No, I'm looking. No. Oh, we had 48.47 low. Man, there's another low at 47.54. I'll use, it just seems like a lot of support in here.
Yeah, 47s do have a lot of support.
47.5 do. If you lose
and
that,
the stock's loved.
Yeah, 46.63. There's your buck drop. If people really come in to take profits in this one, the yearly low is 46.63.
Continuing on the merry parade of earnings.
Yeah.
So let's do Xilinx real quick.
XLNX.
And folks, if we don't get all your tickers in the chat, we're not ignoring you. It's just we got a lot going on. We're trying to cover as much as possible. Panic low in Xilinx. Xilinx comes in at 87.69, and then you just had a steady buyer in here, just real quiet, scooping up stocks. So let's see if they can protect that pre-market low. Minor resistance at 91.50. That's been the rebound high. So we'll that's your levels here for XLNX.
The stock's been out of favor though. It's interesting because you have a lot of the chips that have just been rocking and rolling, and this one is not one of them. It topped out in April of last year at 141 and it's been in a downtrend ever since. We're always like friends. They're trends. That's why I'm like AMD still an uptrend, probably buying the dip. This has been in a significant downtrend, so it's not as easily to say that this is going to bounce right back because you have so much overhead supply still too. People are like, man, the stock just can't turn it around. You think in the last couple of weeks, couple of months, it's been going up, it's been turning around, it gives it all back in one earnings report. So as much as AMD is loved, this one is not. So yes, there's lots of support down here, 89 to 90, but again, just sentiment towards this stock is a lot more negative than it is towards a stock like AMD, which probably makes me hands off.
And wow, 87.69, as I mentioned, it's your pre-market low.
That coincides nicely.
You look at
December low.
87, yep, exactly.
87.56.
Yep.
Joel, these lows, this analysis due to the lows, when you look on the moves, it works.
Who came up with this pre-market stuff?
Good job, Mr. Elconin, on this one.
All right.
I want to move away from earnings. I got to talk Beyond Meat. This is just such a good headline and such an interesting reaction to the news. So give us the headline, Spencer, and let's talk Beyond Meat. And we'll come back to earnings in a minute.
Yeah, I never got the chance to try any Beyond Meat products.
I did.
Tim Hortons, and it sounds like I will not get that chance now because their sandwiches are being removed from Tim Hortons locations in Ontario and British Columbia. I guess they just weren't selling well.
Well, yeah, there's no other reason to remove something than, obviously to that it's not selling well. If it was selling well, they wouldn't be taking it off the menu. I had the sausage a couple times. It was okay. It wasn't great, but when you think about it, it wasn't meat. I mean, it's the same thing when I tried Beyond Meat burgers for the first time. I was like, it's kind of like a crappy hamburger. When I had the Tim Hortons, it's kind of like a crappy sausage. But you know what? It tasted kind of like a sausage, so that's saying something in itself. I didn't think it was that bad. Anyways, the market obviously did. I mean, not the stock market, but the market that people are buying this thing, because they pulled it off the shelves. So what you would think is this is going to really hit the stock. I mean, Tim Hortons is actually huge in Canada. If you're in the States, you don't know how big. Tim Hortons on every corner. In Ontario, I think there's 22,000 stores or something, or maybe even more than that. Just in my city of Windsor, I think there's almost 100 stores. So they are literally like sometimes two on in the same corner. They're everywhere. So it's a big loss for Beyond Meat here. Big, big loss. Just goes to show you the short squeeze, though, like is still a little bit on here. I mean, we get the downgrade from JP Morgan yesterday, brings the stock in a little bit. We get some really bad news after hours, and people slamming it down to 114 last night on that report. They are having seller's remorse here this morning because the stock is now trading back into the green. Is there another headline here, or is this just squeeze?
Something else. Nothing.
I bet it's just the squeeze. This is bad news. It's not good news, but it doesn't matter when you're in squeeze mode. And everybody who shorted last night is punished once again. Those people are scrambling around saying, how can the stock be up on this? Be up on this because it's maybe not done squeezing yet. You know, nothing has ever made sense with Beyond Meat. The valuation, you know, we had Yusko, Mark Yusko on the show, who was an original investor on this, and he said he was selling hand over fist. He thought eventually it's going much, much lower. I do think it's going much, much lower eventually too, but not when the squeeze is on. And the action today is telling me maybe the squeeze is not off yet. But it's hard to just come in here and buy it when you know you're kind of sitting on this hot potato. If you get stuck with it, you're going to get burned because eventually, you know, everything comes to roost. I don't know when that is, but, you know, the valuation makes 0 sense. I'm telling you, I don't want to be short it.
All right, let's look at the numbers. We are up 238. We are.
Oh, there is news, KFC. So there is other news. Thanks, guys. I did not realize that headline. So it's not all squeeze. Whoa. KFC is expanding. That's what the chat is saying.
I didn't even see it.
I did not either. So if that's true, we're just getting from the chat that Kentucky Fried Chicken is expanding their relationship with, but, you know, put it in perspective.
Bigger.
I don't see a press release about it. It's interesting.
That's what 66 stores are apparently going to offer, is what Go for the W is saying in her chat. I'm not sure. This is not verified. It's coming from her chat. So good job. You know, if that information is correct, we appreciate that. But that's why they're saying it's trading up today, is that there's an expanded relationship with Kentucky Fried Chicken. That would make sense.
Yeah, what a tug of war.
That's why I asked the question, because I'm like, you automatically assume there must be some good news too. So.
All right, 124.50. We just hit that. We backed off $1.50 on that. So we'll use that as a target. Interesting day from yesterday, the downgrade. They still got it green on the session a little bit. But let's call a couple targets here. 127.89. That was yesterday's high. Then 129.83. So I don't know. I guess all the way up to 130 for now. I call it resistance. We're $6.50 away. On a pullback, if you're buying this thing early, maybe look for the close of 120.12. Yesterday's low 17.29. So important for it to hold the close here. Don't see anything on the daily charts until 127.89.
All right, we're about to get some data, but let's move on to
actually
GE. Okay,
there's so many big ones. G is ripping here, ripping shorts on this one too.
Yep, the Q4 EPS for GE 21 cents per share versus an 18-cent estimate. Sales also good, 26.2 versus 25.5 billion dollars. They gave some guidance for the year that was a little bit light, EPS guidance that is, but it was a good earnings report, good quarter.
9.4 million shares have already traded here this morning. So big numbers here. Obviously going to trade a lot more, you know, because this could trade 20 million reasonably thinking before 9:30. So it's going to be able to take out any size in the book. You know, 13 might become a level there. You start thinking about the next big whole number, maybe 1250. But you know, this is breakout here right now. I don't know if this is one they're going to fade, but anyways, you know, there's been a lot of people who have been bearish to stock, including myself. And it's obviously still going higher.
Former high of the move, 1224. We're trading 30 cents above that with a pre-market high at 1270. So you want to see this thing, boom, open up wherever, you know, it closes the session. You want to see it take out 1270, chew its way 1280, 1290, see what happens at $13. But the fact that it's 50 cents above that, or now it's only 30 cents above its prior high in the move here. Might think you might find a few sellers in this one. Yesterday's high doesn't look like you're going to see that 1182. So if you do get a pullback, it starts going a little reverse a little bit. Old resistance, new support that comes in at 12.
It's a classic breakout. Breakouts have been working in 2020, so I think there's some room here. I'm not chasing it, but you pull back a bit, may be interesting. I don't know if it's going to pull back though. It's up 7%. And it looks like it's just, walking it up here. I mean, it's pretty straight up, is it not, Joel? After hours or pre-market?
Oh yeah, straight up. Yeah,
straight up. They're just kind of walking it up here.
I see a little dip back down to 1221 when it hit 1270, but you don't know if that was like some.
Maybe they're turning it around.
Yeah.
I hope they're turning it around.
Maybe we'll track down who's our buddy, Mr. Inch, and see what he has to say.
Yeah, we should get what Inch thinks. Yeah. I always said when Inch gets bullish, that's when I'll turn around and buy the stock. I'm waiting for Inch. Although he might be, if he's getting bullish now, maybe he's late to the party. We'll see. He's been sticking on his bear train for a while though.
And that JP Morgan guy is pretty influential too in this.
Yep. Yeah. Tusa.
Yeah,
right?
Good. Very good.
Stephen Tusa. I do want to take a quick pause on the earnings before our guest, and I want to just talk about L Brands quickly here. It is one of the top gainers, one of the top
and I sold it.
That stinks. Non-penny stock gainers here this morning. Their CEO, Leslie Wexner, is reportedly, according to Dow Jones, going to step aside and discuss a sale of the Victoria's Secrets brand. We know Wall Street has been clamoring for that to happen for a few years now, and it looks like it could happen now.
Isn't that the most profitable part of the company?
No, that's
the bad part.
That's the bad part.
Is it?
Victoria's Secret? Well, that's the part that's not growing. Okay. Yeah.
So they're trying to sell. They want to sell somebody their garbage.
It's
good luck with that.
It's the largest part, but it's the part that's been struggling the most.
Good luck with that. So I was long this stock for a while because when they were started to squeeze everything and buying laggards, I thought this could go, and I held it. I had it for about a week and a half, just on a swing trade. And I was like, I'm gonna, stop out, and I would have never got stopped out. I was gonna stop at the low at 1973, and if I would have kept holding it, I would have still had it right now. So I should have just held to the levels, like Joel says, trade the levels. I should have held to that, and I would still be long this right now. But I got spooked. Why? Because it had 2 upgrades and it wasn't responding that well to them. So I was like, I'm just spooked because it's not responding well enough to the upgrade. So it gets a good headline here. It responds to this up 12%. With that being said, do I think this is a big turnaround? Do I think they're going to even be able to sell this? I don't think they're going to be able to sell this. So, but again, the stock is really depressed. So there's room to 25 here. 23, I can see room to 25. I wouldn't be surprised if it, gets there in the next, few days even. 25, there's room to, but so I'm not chasing it. I missed it now. The buy was when I bought it originally, but I got shaken out.
Oh, I definitely didn't.
Joel's got it.
I didn't miss this one.
I didn't miss this one. We both bought the same time early. I got out though when it started going through 30.
This is a Lisa pick. So full disclosure. I do own it. I'm just holding on here. I mean, I don't really trade it from a short-term perspective. 23.80, you pre-market high, you back 70 cents off that. So long it takes to go up to 23.80, take that, go 24 bid. Then I would look for a fade in this one. Looking at the dip off that high, 22.40. So there you go. There's your early trading range, 22.40 to 23.80. That's what I'm looking at. And you're almost smack dab in the middle. And also now it looks like someone's starting to get a little opinion here at 23.25. Your last 3 brackets has stopped there. So 15 cents away from minor resistance. We'll see what happens at pre-market high. I don't know. I have to talk to Lisa about this one. I don't know. I mean, it was a small percent of our portfolios, and
now it's even smaller.
Smaller, so it's getting back.
Yeah. All right. Mike Olson is the managing director and senior research analyst at Piper Sandler. He joins us now to break down the Apple earnings report from yesterday. Mike, good morning.
Morning. How are you?
Good. How are you?
Doing well.
Mike, what's not to like from this report? Is there anything bad, as they said? Anything not great?
Yeah, I mean, it was good, largely across the board. Strong December quarter, material upside from iPhone, good margins. There was some concern, cited around the coronavirus, but even with that, they set March quarter revenue guidance 4% above consensus. So that was all good. I would say, if there were things to pick at, it would be services and iPad. iPad was below expectations, but did have a much more difficult year-over-year comp, so I don't think investors will get too hung up on that. Services, slightly decelerated, missed street estimates for that segment by about 3%. Law of large numbers is probably weighing on services a bit here, as it's now a $50 billion a year revenue business. So it did decelerate by 100 basis points. On the plus side, services gross margin was strong. It was up 150 basis points year over year. So it is facing law of large numbers, but despite that, we do think services should grow in the mid to high teens for at least the next couple of years.
Talk about wearables here. If you had told me a few years ago that wearables would be larger than a larger segment than Mac, I would have said, no way. But here we are.
Yeah, it's pretty incredible. Wearables grew, I think it was 37% year over year in the quarter, so $10 billion quarter, huge number. And I think the real surprise has been just the success of AirPods. And obviously the watch has done extremely well, but I think AirPods have been the real surprise here and have driven a significant uptick in that segment, way above and beyond what could have come just from the watch itself. So we do expect wearables to continue to grow, for this year in kind of the mid to high 20s, and then to continue to grow in the 20s in fiscal 21. So we're expecting another couple of years of big growth there, and there's really no sign of that slowing down in any significant way.
And you're raising your price target this morning, I believe, to $343, correct?
Yep, that's correct. We're going up to a $343 target. We'll have to see what happens related to EPS going forward, because we base our price target off of EPS. And just looking at the amount of buybacks the company has been doing, and they've talked about wanting to get to a net cash neutral position. Currently, they have $99 billion of net cash, so they'd have to spend away $100 billion. And what that means in our model is, with them generating about $80 billion of free cash flow per year, they would have to do significantly more share repurchases than what we have built into our model to get to net cash neutral over the next 5 or 6 or 7 years. So that could result in our EPS being overly conservative, which would then obviously drive our target higher, assuming we keep the same multiple.
Folks, we're on the line with Mike Olson. He's the managing director and senior research analyst at Piper Sandler, joining us here on Benzinga's pre-market prep show. Mike, I got to ask you, okay, so Apple traded at a ridiculously low PE for years and years and years, right? So now they're buying back all this stock. And really, I mean, you are seeing increases in revenues, but not really that much corresponding in earnings per share. So there's a lot of investors out here saying, this isn't right. This is trading at too historical PE is much lower here, and it's keeping them out of the stock. Could you make comments on that?
Yeah, I mean, the multiple is definitely higher than if you look at an average multi-year multiple over really any number of historical years. But we are seeing EPS growth that is consistent and should be, on average, we're modeling for EPS growth of about 14% over the next 3 years. So for a company of this size, again, some of it's related to buyback, but we also are on the revenue side modeling for average revenue growth over the next 3 years. That's somewhere in the high single digits. So for a company this size to have those kinds of metrics underlying it is pretty incredible. And I think that in part is what is driving the multiple higher. The other part is just growth of services. So services, even though it decelerated, still growing more than twice as fast as the rest of the business, and has a multiple or a margin that's dramatically higher than the core business. So that's a good mix shift. And then you just have catalysts coming up with the 5G iPhone release later this year, or iPhones, I should say, multiple versions. And you tend to get outsized multiples when you're entering a product cycle like that.
And what about it just going the other way, like going to like a 50 PE? I mean, we've seen some of these IPO stocks and stocks with no revenues and losing money and just going at just outrageous valuations here. I mean, what do you think the likelihood of that is happening?
I mean, I'd be surprised if there's dramatic additional multiple expansion. What could result in material additional multiple expansion would be anticipation around new products or devices that result in the stock moving higher ahead of when people build that into their actual models. So if there's, for example, later this year, if there's reason to believe that the 5G iPhone is going to have a more dramatic impact on the numbers than what's built into estimates, then you could see the multiple kind of creep higher based on that.
Mike, we talked about Apple's guidance, and that was sort of colored by Tim Cook's commentary about they just don't know really how the business will be impacted by the coronavirus in China. What can you say about the impact of the coronavirus on Apple's business right now?
They said it's pretty limited at this point, and they had closed one retail store, and then there have been some third-party resellers that have closed in that region as well. So it sounds like it's fairly limited, but they're just trying to be cautious with the guidance. At some point, there could also be an impact not only on demand, but on production. Again, from just paraphrasing what they said on the conference call, it doesn't sound like there's a significant amount of production in kind of the region where the virus is most impactful right now. So I think it's mostly the company trying to be cautious, with the potential for the virus to worsen over the coming months or quarters. But it sounds like at this point the impact is fairly minimal.
And what are your expectations for the iPhone rollout this year?
Yeah, so there are a couple catalysts on the horizon for iPhone. You've got rumors of a lower cost iPhone potentially launching in the next couple of months, and then obviously the 5G iPhones later this year. We don't really expect 5G iPhones are going to have a dramatic effect on iPhone revenue in any one quarter or maybe even any 1 year, but instead will help to create a multi-year upgrade cycle as people shift to 5G. If you do look back and look at if it were to have an impact in 1 year, the last major iPhone upgrade cycle was the iPhone 6 Plus, and that drove 52% year-over-year iPhone growth in fiscal 15, which was the first full year after the iPhone 6 Plus was released. For comparison, and to answer your question, we're only modeling 5% iPhone growth in fiscal 21, so that would be the first full year of 5G iPhone availability. So there is a precedent for major releases to have better performance than what we're modeling for, but we do think this will be a multi-year upgrade cycle and not something that happens all in 1 quarter or 1 year.
They're coming out with a smaller phone, right? Is that because I mean, to me, like I just wouldn't buy that 10. I mean, I like to keep my phone in my pocket, my shirt pocket. So I'm holding out. Everyone's going to laugh at the one that I have, but I don't think I still have like a 5S or something. Still make those, but hey, they come out with a smaller phone. I'm all in. I'm buying one. I just want to ask your opinion on, we have a lot going on in the streaming wars, right? And Apple TV and Comcast and Disney Plus and everything. Where does Apple fit into that ecosystem? And Apple TV has been something that's been talked about by years by your former colleague Gene Munster. Never really been fully monetized. Where does Apple fit into the streaming wars?
Yeah, right now it feels more like what Amazon has done with Prime Video, where it's more of just something that helps to engage the customer base and kind of keep them in the ecosystem and excited about using the products and services within the ecosystem. So in other words, it's almost like just a freebie for users of Apple devices, and again, kind of keeps them zoned in on using Apple devices and the services that go along with that. We'll see over time if they really push hard to try to drive this as something that could be a standalone significant revenue generator. But considering right now they're giving it away for free for anyone who buys an Apple device, which is going to be a large portion of their customer base, or existing customer base, I should say, then at this point it's really more just kind of a cost than it is revenue additive. it does create a little bit of competition for the other players in the space, where now there's more bidders for content. But at this point, given Apple's array of content is fairly limited, they're not overly competitive with Netflix or others in the space.
And one more for you, Mike. Just, do you have any comments on any of your other coverage as it relates to earnings, whether it be Netflix or eBay or anything like that?
I would just say nothing really on eBay. We continue to be concerned that they are going to be challenged to revitalize kind of the core marketplace. So there's some kind of mechanical things they can do with the business, like selling StubHub and things like that. But I think it's going to be difficult to revitalize the core business. And then on Netflix, we just continue to believe that they're going to be a beneficiary of content dollars shifting from offline to online. And while there are going to be multiple competing services, and already are multiple competing services, we think the rising tide of that content spend will allow multiple winners. And we think Netflix continues to be the best position there, given the content that they've made available and the pricing that they have in place.
All right, we've been on the line with Mike Olson. He's a senior managing director, senior research analyst at Piper Sandler. Mike, thanks for the time today.
Thank you. Take care.
Thanks, Mike.
All right, 8:47 now. Let's I guess we'll bring it back to the earnings. So I didn't give eBay's numbers. I'll give them real quickly here. The earnings report was out yesterday after the close for eBay, and it was okay, I guess. The EPS beat and the sales beat, and they raised their dividend, but the sales guidance for the quarter and for the year was light, and I think that's what Mike was referring to there in terms of revitalizing their business. So it was a good quarter. Dividend raised by 2 cents a share from 14 cents to 16 cents, but light on that quarterly and fiscal year sales guidance for eBay.
The stock is just out of favor, and it continues to be out of favor. You do have major support that you're going to test here right now. If you just look, to the recent lows, there's so many down here in the mid 34s. So does it bounce out of here? It's important that it does. If it starts breaching through 34, then, you have this huge, I'm just looking, at this, all the support. I mean, from the last year, you have like 7-8 lows in this 34.5 area. We start getting through there, then it starts to open up, and then you're starting to look like, you can have this whole head and shoulders. If you go out further, you can see it, Spencer. If you go to the monthlies, you got this whole left shoulder in the first half of 2019. Then you have the top when, with the StubHub was, going to be the thing that turns this company around in the summertime. And then the right shoulder is formed here in the last few months. So below 34, you start to see a slippery slope, and it's a slippery slope. Like, we went up very quickly in 2019 from 26 to 34. Not saying it could go back down to 26, but I could see how it could lose a couple dollars in a hurry if it breaches 34. So absolutely needs to hold that whole 34.5 area.
And if you want to look at this on the monthlies, you got a head and shoulders top, and then you got another head and shoulders top. You had a head and shoulders top.
Doesn't look pretty.
No, it doesn't.
Unless you have dandruff.
Yes, and then you just got multiple lows on the monthly charts. Monthly charts do hold more significance. Last 3 months lows, 34.5. Call that. That's a must hold level here for eBay. You're down $1.62. You need to get up to 35.49 to get to the bottom of yesterday's range, and it's going to take a big lift, maybe something during the conference call. I don't know, because that was they reported after the close. So we'll see what happens at 34.5 in eBay.
Let's go to Starbucks here. In addition to their report yesterday after the close, they also announced they're closing, I believe it's half of their stores in China because of the coronavirus. I'll give you the numbers that they gave us yesterday. Q1 adjusted EPS 79 cents versus 75-cent estimate. Sales of 7.09 billion versus 7.1 billion. So an EPS beat and essentially in line on that sales figure. They reaffirmed their guidance for the year. Comms for last quarter up 5% globally, up 6% in the US, and up 3% in China. I think
this is the opposite of the Boeing trade, where you have this underlying, that you knew was going to be a bad quarter. Starbucks is going to be okay this quarter. It's next quarter we're worrying about. And the key line for me, if I'm looking at the Benzinga Pro, is when they're talking about the guidance. Starbucks reaffirms their fiscal year 20 guidance, but says the guidance excludes any impact from the coronavirus.
Yep.
They got half their stores closed in China right now. It's a huge revenue. Like, how much of their revenue comes from China? It's big. So I think, next quarter is probably not going to be good. Like, I mean, as long as these stores stay shut, and it doesn't look like they're opening anytime soon. I mean, maybe they get this thing contained in a week or two, but this is impacting their numbers. It's right what we were talking about. So I think it's not surprising that on the spike, people use that opportunity to sell. I mean, this got over 91, which is craziness. And especially when they're saying about the guidance and it doesn't include the coronavirus. The coronavirus is going to hit the numbers next quarter. And it's all about, the guidance is always more important than the current quarter's numbers. So I'm not surprised at all that they gave it all back. I mean, we don't know what that impact's going to be. So I don't know if they slam this thing down. But I think, the rallies, if it rise $91, $92, I think that's, and it already did. I mean, I'm not surprised it got sold.
Couple comments here. You had a gap down day from the virus on Monday. That gap 89.45 to 91.34. You get to 91.50. All right, so everyone's like, I'm getting my money back. We went to 91.58, and then we're back down. What I think is very interesting here, folks, is that the way the market has recovered, but this stock hasn't. Extremely low relative strength over the last 2 days during this.
This is a coronavirus, this gets hit. It's like your win. It's a smaller version, like win's direct hit, but this is definitely impacted by the coronavirus. So watch your headlines. Coronavirus gets contained, this will start rallying. Coronavirus doesn't get contained, the death rates start going up, or the progression analysis we were showing early in the show continues on that. This stock will continue to get hit. This is direct. Direct play on coronavirus.
Yeah, and I take a look at this one. You do have a pair of lows at let's call it 87.60. You're trading a buck below that. So, if you're a little bit worried about this one on the downside, you're still a buck away from a double bottom, 87.60, let's call it. I think if you get through that, I do see some other lows here at like 87, 87.31, but just with the news out, the way this did not come back yesterday to 91, I think you lose that double bottom 87.60. I think you'll chew right to 87 even, but we'll see what happens here in Starbucks.
Let's go to back to some Dow components here. AT&T, I want to get to that report here.
Okay.
They not a big mover, but a big report, big company. Q4 adjusted EPS 89 cents, so it's a 2-cent beat. Sales 46.8 versus $46.95 billion. So a slight earnings miss. Slight earnings beat and a slight sales miss for the Q4 quarter. They also reaffirmed their guidance for the year.
There's this underneath demand on this thing, 37.5 to 38. There's buyers. People are comfortable with the dividend. They're in it for the dividend, 5.43% at these levels. I know it got down a little bit lower there in the pre-market, 37.60. I think it had. That was a gift. I don't think it's getting back down there. I think you got buyers in the 38, low 38s and upper 37s. I think there's buyers. So I don't think this gets slammed today.
37.55. That went through potential. You had a double bottom at 37.80, so you're probably happening if you picked up there. I mean, in this, in this environment, if people are stuck in their houses and not going anywhere, they're probably going to be on their phones more and using more data. So I think this is a stock that could benefit from.
Well, interesting you say that. And I was thinking about Netflix in that way too. I mean, not that everything gets hit if obviously the coronavirus continues to expand, but you think about people nervous. I mean, they're probably in China, looking at their Netflix right now a lot more than normal. So, or if you didn't have Netflix, maybe if you're not leaving your home, maybe you're looking at subscribing to it. So, and it may not necessarily be a bad thing for a company like Netflix or, companies that are.
I think that's a
stretch.
That's a little bit.
Well, it's a stretch that's going to really impact their numbers.
A little bit of a stretch there. Let's go to Mastercard here. Mastercard, their earnings beat and their sales were in line.
Beast.
Stock up $3. I still have it in the long-term portfolio. I'm in this for life, I think. 323. It's near all-time highs. You do have some resistance up here, 327. So I'm not adding to it up here.
Let's see. You did get a little move up to 326 or 325.90 pre-market high. Just ahead. Keep an eye on that all-time high here. That's 327.09. If you want a more intermediate number here, all-time closing high is 324.98. So if you're looking for that mark today, you could see it still $2 away. A little bit on the fade. If you're worried about this one, I don't think you really have to worry until you breach this let's call it 312 area. See a pair of lows, 311.04, 312. So nice move up, but off the pre-market high.
Oh, maybe China isn't there. The chat's saying that Netflix is not yet in China yet. So
Oh yeah, you know what? I think
they'd been talking about it forever. I thought that they had actually.
That. I think we knew.
When are they going to get there? I mean, what's taking them so long? Why?
It was China and India.
Government's not letting them in.
The last two, China and India were the last two hurdles, I think. And I don't. They may have gotten into India, but they're still working on China.
It's going to be huge for them once they get in China.
Any other earnings reports?
Mickey D's.
Okay.
Oh yeah, we didn't do McDonald's.
Asked about
this feels like Starbucks.
Forgot about them entirely. McDonald's reporting this morning Q4 adjusted EPS of $1.97, beat by a penny. Sales $5.34 billion versus a $5.3 billion estimate, so they beat that number as well. Comp for the quarter up 5.9%.
They've got some stores in China too, though. Maybe not as much impact as Starbucks, but are they? Did they say anything about their stores? Are they closing?
Not that I've seen. You know what? I need to double check. I
was just trying to quickly leaf through the pro here.
I last checked a couple of days ago.
I don't know if they've closed stores or not there yet. I don't think it's as significant. Like I think China is almost a third of all Starbucks. Like so, it's big. I don't think McDonald's is like a third of it. It's not closed probably. So it's probably just a smaller portion. So not as impacted. But again, gets the spike and they sell the spikes. So
I think McDonald's may be bigger to China than China is to McDonald's, if that makes sense.
Spike up 214.18. If you were paying attention to your daily highs, the high of the move, 214.18. That was your high 3 days ago. And then where'd you get to in the pre-market? 214.60. So you got through a little bad. So I'll call 214 the resistance. Coming back on the downside, good report. You've been a little bit red, but if you do go red on the session here, I'd look for more downside. Maybe not too close. Yesterday's low was 09.86, but they really decided to whoop up on this thing. Your low on Monday, 207.30. But needs to stay green, 210.39 yesterday's close.
They're telling me my Starbucks numbers were wrong. I said a third. I just threw that out. I didn't know the numbers. It's 16%. So that's why we have the chat. They can correct me there when I'm just grabbing something from my head. I thought the numbers were higher. I'm wrong. So 16%. Still significant for Starbucks, though.
Okay, as far as ratings, they're mostly inconsequential. Their reactions to earnings. There is one, though. There is.
What do you got?
Which one you like?
Facebook this morning is getting an upgrade at Raymond James to strong buy, and they're raising their price target to 270. They're making a call ahead of their report.
Nice.
That's guts. They got some guts.
Yep.
That's interesting.
What did
I'm still long Facebook in the long-term account, not planning on selling it. That's a really gutsy call.
I'll just go with Nick yesterday, and Nick he thinks they're going to blow it away, and so I'm not gonna fade Nick yet, as he's made some good calls in the past. 221.70, that is your pre-market high, and
look at all those highs, Joel.
I know.
What's going on at just under 223, 222, 263, 222? This is getting rejected 4 or 5 times in the 222s. I mean, that's where it's going to probably challenge again here today. It'll take the earnings report to take that out, in my opinion. But if it's a good report, it could.
Yeah, I was just going to point that out. 22.75, your all-time high. The previous highs were 37, 29, 63. So probably what you probably have a large institution targeting, like try and get me out at like 222.50. So they sell a little bit in the 30s and the 20s, and then when it gets over a half, they sell a little bit more. So split all those numbers today, see if that seller is still there. Large seller or group of sellers at 222.50 here. in Facebook.
Can we just real quick talk Tesla? They're also due to report today. So the biggest earnings after the close today: Microsoft, Facebook, PayPal, Tesla. There are a lot. Those are just like the four that I think are the biggest. We're also getting Mondelez, Las Vegas Sands. But can we just talk Tesla here?
Yeah,
Let's look at the juice. Let's just price that straddle really fast. Bring it up from the closing prices because obviously options aren't open here yet. Let's just look, to this week's expiration, and we will go out to 565 is close enough. 30, 60. Oh, it's 60 points. How do you make money buying options? It's $60. The straddle 60, not 660. $60. Holy mackerel! That's a lot of money to pay.
If you can't make money,
I guess you're usually just one direction or the other. So if you want, you can buy that's the 565 puts for $30, or you can buy the 565 calls for $32. Wowzers! 60. It's $61 if you go in between the bid and the ask. 60. Say 60. It's safe to say it's 60 points. 60. Holy!
He told you.
Makes me want to sell straddles.
Yeah, I'm reserving comment. I'm going to be getting. Remember on Friday, Raz said he was going to give me his Tesla for a week. Yeah, so I'm going to.
Are you doing that?
I'm going to get it this weekend.
For really?
Yep.
Oh
I'm going to come and pick you up, Spencer, and then we'll go over to Canada and we'll hit that 401 and we'll open that baby up. We'll see how fast it can go. So
you're going to get a speeding test. Watch around Chatham because when you get through Chatham, they're really sticky on that speed limit.
Oh, really? Okay. Well, maybe I'll
look out for Joel. He's coming through.
Joel's going to test it if these things really do prevent car crashes.
You know what? You know what's really good? What I think the best thing about owning a Tesla is if you get pulled over for speeding, you say, I wasn't speeding.
I wasn't driving. I wasn't even driving.
Give the ticket to the car. And it's Jason Raznick's car. So give the ticket to Jason Raznick.
Yeah.
This isn't my car. You got to give the ticket to the owner.
Go on his insurance. All right. I think that'll do it for our show. I want to thank everyone in our chats on YouTube and premarket.benzinga.com. Thanks to our guest, Mike Olson. For a free 2-week trial and discount of Benzinga Pro, click on the link in the description of this video. That'll get you a trial and connect you with one of our sales people who will get you a discount for listening to our show. As far as upcoming events, the Benzinga Cannabis Capital Conference, if you're in the Miami area, February 24th and 25th. Learn more at benzingaevents.com. You can always catch our show. Reminder on YouTube, Spotify, iTunes, SoundCloud, Stitcher. You can call us 734-494-0246 or leave us an email, premarket@benzinga.com. The last thing, please remember all the information from our show meant to be used as informational purposes only, not for investing or trading advice. Everyone have a great rest of your day. We'll be back with you on Thursday.